The notion that Iraq's monetary transformation is a recent initiative, something conceived in the last few days or even the past week, misrepresents the scope and depth of what's truly taking place. What Iraq is currently undertaking is neither a reactionary measure nor a local experiment. It is part of a much broader, meticulously coordinated process that has been years, if not decades, in the making. This effort is deeply embedded in global economic restructuring. It's a reflection of a wider shift in international monetary policy, cross-border financial integration, and the pursuit of equilibrium among currencies in an increasingly interconnected world. When we talk about Iraq's economic reform, particularly in relation to its currency, we must appreciate that it is both a national movement and a global phenomenon, one that may trigger ripples across multiple economic systems worldwide. To understand this better, we must consider that Iraq has long been a point of interest for international financial institutions. Its currency, the Iraqi dinar, has been subject to unusual scrutiny and speculation for years, especially since the early 2000s when it was reissued under IMF guidance following the fall of Saddam Hussein's regime. That reissuance marked a transition, not just politically, but economically, a shift toward rebuilding a functional and credible financial system. However, a reissued currency is not the same as a revalued or fully reintegrated one. Since then, a multi-phase process has unfolded. It started with stabilization, moved through digitization and banking sector modernization, and now appears to be approaching a critical juncture, one where Iraq's currency could eventually take its rightful place on the global stage. And this is where the broader context becomes essential. Iraq's reforms, whether in the form of modernizing payment systems, cleaning up its banking sector, creating new regulatory frameworks, or advancing anti-money laundering measures, are being conducted in tandem with similar initiatives in other countries. This is not coincidental. It reflects a level of coordination that goes beyond bilateral agreements or national policy reforms. It signals a larger international effort to harmonize financial systems, reduce arbitrage, and prepare for a realignment of global currency values. Think of it as tuning a global orchestra, where every instrument must be adjusted in pitch before the symphony begins. Iraq, though uniquely positioned due to its vast untapped wealth and geostrategic importance, is just one part of this orchestra. Now, let's break down why synchronization is critical. The international monetary system, particularly since the Bretton Woods Agreement, has relied on coordinated policy actions among central banks and international bodies like the IMF and World Bank to avoid dislocations in capital flows. Sudden, unsynchronized changes in one currency can cause arbitrage, capital flight, or trade imbalances. Therefore, when a country like Iraq is on the brink of re-entering the global monetary system in full force, it's not simply flipping a switch. It must align itself with the broader monetary frameworks that other nations are also preparing to adopt. This includes compliance with Basel III banking standards, implementation of ISO 20022 messaging protocols, and participation in new cross-border financial settlement systems, many of which are being built around blockchain and digital ledger technologies. And therein lies another layer of synchronization. The existing global financial order, which for decades has relied heavily on the dollar as the world's primary reserve currency, is gradually evolving. Central banks are diversifying their reserves. Nations are experimenting with central bank digital currencies, CBDCs. New financial messaging networks are being launched to compete with or complement SWIFT. And bilateral trade agreements are increasingly being settled in local currencies rather than defaulting to the dollar. In this environment, Iraq's potential emergence as a credible player with a stable, asset-backed currency is not just a domestic success story, it's a signal flare in a sky filled with similar movements. The tide, in other words, is rising. Now consider the psychological and economic impact of such a shift. Investors, analysts, and policymakers around the world are watching Iraq not just for its oil exports or geopolitical positioning, but for what its currency will signal about the future of global finance. A successful reintegration and revaluation of the dinar could act as a template for other nations, especially those undergoing post-conflict recovery, attempting to monetize their natural assets, or seeking to digitize their economies in alignment with global standards. And what does that look like on the ground? It means new banks opening in rural provinces. It means digitized ID-linked wallets for farmers and teachers. It means real-time trade settlements with neighboring countries. At the global level, when multiple countries undergo this type of transformation in tandem, it becomes a paradigm shift. This is why phrases like "all boats rise with the tide" are so impactful. They capture the essence of mutual benefit, of shared upliftment, and of an ecosystem approach to global prosperity. The rising tide doesn't discriminate. It lifts the small and the large, the known and the forgotten. And in the context of synchronized financial reform, it also minimizes risk, because no single country bears the full weight of adjustment alone. So when we talk about Iraq's process, we must move beyond thinking of it as a solitary act. It is, in many ways, a catalyst. It is a key part of a global symphony being orchestrated by central banks, development agencies, financial regulators, and technology providers who all see the writing on the wall. The old systems are changing. The foundational pillars of global finance are being re-examined, and new structures are emerging to support a more balanced, multipolar world. Iraq is not starting this process now. Iraq is stepping into the next phase of something that has been methodically, patiently prepared over many years. And as it steps forward, other nations will too. Whether it's Vietnam, Zimbabwe, Egypt, or Brazil, nations with undervalued currencies and significant natural or demographic assets, they are all watching, all preparing, all aligning. The world is being rewired, both digitally and monetarily. And the impact of these synchronized efforts, once fully realized, will not be subtle. They will reshape how we understand value, how we trade, how we measure economic success, and how we relate to one another across borders. In this world, Iraq's journey is not an outlier, it's a bellwether. And the boats, they are not just rising. They are preparing to sail toward an entirely new horizon. Thanks for tuning in to Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed, and stay ready.